We're back, everybody. We are going to talk to all of you today about three undervalued dividend stocks to potentially buy in the rest of July. So get ready, get hyped up. The dividend diplomats are back, getting ready to talk to you about some undervalued dividend growth stocks.
Guys, if you're on this journey with us, smash that subscribe button, give the video a nice thumbs up. It's the one thing that doesn't cost anything right now in this rising economy for pricing. So please spread the love on dividend investing. As your boy Bert and Lanny, spread the love on dividend investing.
That's right. What a wild week this one was in the stock market, Lanny. Did you know the stock market actually closed about where it started for the week? You would never have
How,
thought that.
how many times have we said that? Well, it finished where it started.
Yeah, it did nothing. I mean, in
Well,
all
it went
seriousness,
down. It did drop.
yeah, you're right. Didn't do nothing. But by the end, if you zoom out, it did. I mean, it was a wild week. We had another insane inflation report. That's kind of what just blew the cap off everything this week, right? Come Wednesday, it was reported higher than expected inflation. I think it was over 9% in the month of June, is what it was. Higher than
9.1.
expected. Some people are saying there are signs of it cooling. They said that last month, though, so I'm going to wait to see it until I believe it. As a result, though, Lanny, the Fed was like, oh, so about that interest rate cooling here. Not so fast, my friend. What was on the table after this inflation report?
So what's on the table now is a full percent possible rate hike, not just the 75 basis points or 0.75% rate hike here at the end of July. Now there's a large probability that 100 basis points or 1% could happen.
It's a while. Be a record-setting increase, obviously. Just keep adding them to what has been a rising rate environment. But that's why the market dropped, and then it just popped right back up again on Friday to get us back where we started. Everyone feels good usually on the Fridays after these big reports are done. That seems to be the trend.
I will say gas where I work is right around $4.30 a gallon, which is down almost 70 to 80 cents from where it was. So, you're talking a nice little correction in
And
gas
that's
at least.
and that's partially why people are saying inflation is going to be cooling over the next month or so. You might see it come down because you see the gas prices coming down. They're no longer increasing and shooting up, but still, $4.30, still expensive compared to what it was just a few months ago. It's not cheap.
And then, countless, real estate articles coming out. The sentiment has never been as low as it is right now for buyers looking forward right now. We actually, from talking to mortgage personnel as well as agents, there's been a lot of buyer back off. So a lot of buyers are actually backing away from buying houses that they were right in the middle of closing on.
Yeah, it's insane. It just happened to my neighbor. They weren't too happy about it. I can tell you that. They found another seller, but it wasn't for the price that was initially agreed upon. So first person got out, didn't like it, found a reason to cancel the transaction, and now we're gonna have another new neighbor. Wild.
Well, Mr. Rogers.
Yeah, but you know what? We're here to talk to you about undervalued dividend stocks. What's on the watch list? I caught that, Laney. Don't pretend like I did. I'm not gonna pretend like I didn't hear that there. Um, Obviously, no matter what's going on in the market, we're always looking for values. So we look for stocks using our dividend diplomat stock screener that has three simple metrics: PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. I kind of do this together this morning because I'm not in the mood to add any more positions. So I just found three companies that are undervalued within my portfolio, in my wife's portfolio. That's going to be the theme here. So I'm going to be excited. Let us know in the comment section too throughout the video and at the end what your thoughts are about each one of these companies or what other stocks you are watching.
I'm loving these three stocks you put together, Bert. I mean, we are talking two are dividend aristocrats on the list. And I know you couldn't get away from a certain state and a certain industry as well on this list. It made me chuckle a little bit. But Bert, like you said, these are three stocks you currently own, three stocks that are easy buys right now for the entire dividend investing community. And all three have dividend growth under their belt.
That's right. So let's start here. Let's kick it off. Number one, this shouldn't surprise anybody. T. Rowe Price, ticker symbol TROW, the asset management company, the $1 trillion plus asset under management, continues to have a rough 2022. They are down 40% year to date, down 43% over the last 52 weeks. Although the price has come up a little bit over the last few weeks, month or so, it is still showing insane signs of undervaluation.
Guys, I tell you what, this stock has been on the radar, on the stock watch list. I know Bert, even we've been buying this stock throughout 2022. I'm going to say it's been on the list ever since the stock market started to fall, obviously reducing T. Rowe's assets under management. I mean, it's probably been about 6, 7 months. It's been just on the radar.
Yeah, because and that's why we continue to watch it, continue to buy, and we'll continue nibbling and adding a share here and there because of it. Running through the metrics here, that first metrics, the price to earnings ratio, price 115.38 as of July 15th close. Divide that by 939.40 EPS, PE ratio 12.29x.
Wow. Okay. Again, another low price to earnings ratio. Hey, we'll take it when we can, but let's slide into that second dividend stock metric, that dividend payout ratio, Bert, because we look at that 40 to 60% as the perfect sweet spot, because guess where T. Rowe Price lies?
In that sweet spot, 51% payout ratio with that annual dividend of $4.80. That's fantastic.
Jose.
Watch the Derby this week. Watch that home run Derby this week.
Let's go.
Ramirez.
Come on.
Yeah, perfect payout ratio. Nothing more to say. If earnings slide a little bit, plenty of room to sustain that dividend and continue growing it. That's what we're looking for.
Talking about growing, let's slide into that third metric, dividend growth, because they've been growing that dividend for 36 plus years. They've been doing it at an alarming rate, over 15% on average over the last 5 years. Again, beating the rate of inflation. And wow, let's look at that bonus metric though, because here's the sweet spot.
Yeah, because surely if they have a high 5-year dividend growth rate, that means they have a low dividend yield, right, Lanny? That's usually how it works.
It's got to be how it works, right?
But it doesn't. Their dividend yield is 4.16% right there. So after the price fell 40%, that yield has shot up well over 4%. There aren't too many companies that are going to offer you that yield and dividend growth factor combination.
Let's go. Let's make some noise for T. Rowe Price. Again, down 40% this year, down over 40+% in the last 52 weeks. If there is a horse that's getting beaten and then getting kicked after it's been beaten, it's T. Rowe Price, guys. So in summary, 12 times price to earnings ratio, 51% payout ratio, 15% dividend growth rate with an above average, almost 3x dividend yield than the S&P 500 at 4.16%.
Our position's not small. I own 77 shares. My wife owns 17. Combined 94. I think it would be a cool milestone if somehow between our two combined portfolios we could get above 100. That's at least 6 more shares. Very easily doable over the next month or so.
Or the next week.
All right. Well, we'll see. Let's see how the week plays out. Let's move into stock number 2. You're right, Lanny. Yeah. You're right. We can't stay away from the state. We can't stay away from the sector. This company is headquartered in Ohio, of course. Come on, everybody. You know I love the Ohio stocks. Columbus, though, so not Cleveland. It's fine. It's fine. Banking sector. You know it. The banking sector. This company, Huntington Bank, ticker symbol HBAN. I've been talking about this bank for a while.
Huntington Bank, very large, top 20 financial institution here in the United States. No, they are not a local community bank for all those that think that they are. Yeah. Get that out of here.
Yeah. Always cracks up. We see it in the comment section. Banks are hilarious right now. This is going to be a great time to keep banks on your radar because if you notice the headlines, look what JP Morgan did. Look what some of the other ones. I think Wells Fargo did this. The economy is forecasted bad. They're increasing their allowance for bad loans there, taking a big hit to the income statement. So earnings are going down right now, which is expected in this market. So we're going to look when things get better. They're going to have a nice reserve that they can reverse and get into earnings in the future when it comes on.
Hey, Bert's saying that, not me.
I'm not saying it. I didn't do it. I didn't do it.
But now, Bert, what about that price to earnings ratio? Huntington. T. Rowe had a 12. What does Huntington have here?
All right. Price to earnings. Price $12.51. Earnings per share $1.38. That's a price to earnings ratio of 9.07x. But what else do we have to look at when looking at valuation for banks?
that price to book ratio. And guys, we look at that. If it's around 1.1, if it's below 1, even better. Huntington only at 1.1 times book value right now. So decently valued, not extremely undervalued from that standpoint, but for a large bank, it's pretty good.
Yeah, so both metrics that we look at here for valuation for banks are showing signs of undervaluation. Let's move to that dividend. Annual dividend, 62 cents. That's a perfect payout ratio of 45%.
Oof, another perfect payout ratio. Another one on the list. That's pretty wild. Guys, ever since they passed the stress test talking about the dividend growth, they did increase their dividend. They increased it by a pretty decent rate. The average right now is about 15.7% for Huntington. But Bert, I have to say it again, like I said for T Row, it's not about also the dividend growth, because this one you actually get paid right here, right now. Because what's that dividend yield look like for Huntington Bank?
On the verge of crossing 5%. It's currently at 4.96%. So
GDP, let's go.
yeah, that is that's why I like Huntington. The high yield, the strong dividend growth, perfect payout ratio, great valuation. We'll just put the chart up because I kind of just summarized it as I was talking through it. The metrics are looking strong for Huntington. I crossed 100 shares several weeks ago. I talked about that in a purchase video. We own 117. I see you mouthing it, Lanny. I think working towards a goal of 200 shares in the long run is not a bad thing. But the nice thing
Or in
is,
1 week.
yeah, or in 1 week, sure. Their price, the nice thing about Huntington is only 12.51, so it's very easy to pick up 10 share chunks of Huntington, and it's not a huge stress on the bank account.
Sounds like you're buying, about 20 shares a day this week.
Yeah, maybe I'll throw my Yada earnings into Huntington there.
Good. Buy a share.
Yeah, if I get a strong enough week, get the tickets fall the right way.
All right. In summary, guys, Huntington, 9 price to earnings ratio, a perfect payout ratio of 45%. Dividend growth, again, over 15%, pretty similar to T Row. Dividend yield, I'm going to actually say it 5%. Let's just call it how
Round
it
up,
is.
round that sucker
Round
up.
up. Give me that 4 basis points. But Bert, you had 3 stocks on your list. That
Not
was
one,
2.
not two, but three. I just wrote
3.
about this on our blog, so this shouldn't be a surprise to anybody. It just hasn't been on my watch list in a really long time. My wife owns this company, so I don't talk about it too much. We bought it for her a long time ago. Metrics are looking strong though, Lanny. This company is Caterpillar, ticker symbol CAT, CAT. Yeah, I mean,
The cat.
yeah, obviously the largest in the construction sector. It's construction season, so everybody sees Caterpillar's trucks, construction tools laying around everywhere there. They're going to be one of the major winners of that infrastructure bill that was passed. The $1 trillion that are going to get pumped there. Someone's got to actually do the work for that. So Caterpillar is going to get a nice benefit from there. They're working through some supply chain issues though, so the price has naturally fallen down. That's why we're liking Cat. There are some great things there, but of course, the metrics also speak for themselves when we run them through the Dividend Diplomats dividend stock screener.
So, guys, let's look at this little cat that's on the prowl over here. I love Caterpillar, Bert. I'm pumped that you wrote about them, and I'm pumped that they're on your dividend stock watch list because I know you've owned them for a long time as well. But guys, they're trading at 173.88, again, down over 16% this year. Price to earnings right now, based on analyst expectations of about $12.46. P ratio is higher than the other two, but pretty low for Caterpillar, who's usually higher. They're at 14 PE.
Yeah, that's what really jumped off the chart here for me with Caterpillar. Their annual dividend is $4.80 as well. That gives you a perfect payout ratio of 38.52%.
Wow, guys, very low payout ratio. Again, actually the lowest on this list. And that is very, very good to know because, guys, when we talk about dividend growth, you want you know, a nice happy medium with the payout ratio so that they can continue to fuel that dividend growth. And I think it was this year, Bert, you can correct me if I'm wrong, where Caterpillar actually came out with, I think, around an 8% dividend increase this year.
You're right. Yeah. So it's right, very solid, right in line with inflation there, which is great because they're a dividend aristocrat too. They've increased that dividend for 32 consecutive years, although it's always a little choppy how they do it. In order for you to maintain your aristocrat status, you just got to pay. Just got to pay a larger dividend over the years. So whether you announce it every 4 quarters, like some companies do on a very scheduled thing, or sometimes you wait 5 or 6 quarters to announce that increase, it doesn't matter as long as the payment increases. That's why Caterpillar is always funny.
Guys, so yeah, dividend yield of 2.76% coupled with a decent dividend growth rate. Bert, you want to summarize these dividend metrics for the cat?
PE ratio just under 14, payout ratio 38.52%, 5 year dividend growth rate 5.82%, years increasing 32 consecutive plus with a yield of 2.76%. My wife owns 13.9 shares of Caterpillar, so maybe nibbling on one or two here or there. Never bad to keep growing that position. Get it to, a 20 would be a nice flat number. It'll take some time because I'm putting ambitious growth for each one of these three positions amongst
This
everything
week.
else. Yeah. So we'll see. But we're going to put the chart up here to summarize. Again, the watch list is T Rowe, Huntington Bank, Cat. I like all three of them. There's no ranking one way or the other. They're all great
Rank it. Come
companies.
on, Bert, I'm giving you $500. Where are you going? Go.
I would just I think $500, one share Caterpillar, that's 173, 10 shares of Huntington, that's another 125, just throw the rest into your price. I think that rounds it out pretty freaking well if you
Wow.
ask me.
And you'd have a pretty good overall dividend yield, probably closer to 4, if not maybe even above 4% if you did that. That's pretty interesting.
Yeah, so let us know what you think of these three stocks on the watch list. If your thoughts, do you own them or you own other companies in their sector? I mean, it's all great, guys. The goal is to find undervalued dividend stocks. These are three of many right now. There are a lot of great value out there in the market. So let us know if you're not watching these three, what stocks are you following in the comments section?
Guys, let's build that passive income stream. Let's buy assets that produce cash flow for your wallet. That's the goal here. Is you can buy dividend stocks, create that additional income stream that you either don't have or you want to add to it. Bert, I love all three of these stocks, man. Good job on this list.
Thank you. Thank you, Landy. Let's just keep going, everybody. Let's keep on going. That's what it's all about here.
If you haven't already, definitely subscribe to the channel. Give us a nice thumbs up. Again, we're trying to hit everybody as much as we can to help show these dividend stocks that we analyze on a very frequent basis. Go get it. Go buy some stocks. Go buy some assets. That's Bert and Lanny from the Dividend Diplomats. Over and out.